Hi, we are from Group 6 of the Set 2. We presenting about the Malayan Banking Berhad, and our group consists of 4 members, which is me, myself, Muhammad Ali Faikal bin Azan, and next is Jiang Hong Yu, next is Gao Yao Yue, and next is Xu Shani. Okay, moving on to the introduction of the company. Malayan Banking Berhad or Maybank is the largest banking group in Malaysia and one of the leading financial institutions in Southeast Asia. It established on 31st May 1960 and it is listed on the main market of Bursa Malaysia and it is among the country's largest publicly traded companies. Maybank offers a wide range of financial services including retail, corporate, investment banking, Islamic banking, insurance and also asset management. The group operates across Asians and selected international markets, servicing individuals, businesses, corporations and institutional clients. Its corporate direction is guided by the vision of becoming Asian leading financial service providers and the mission of humanizing financial service. It focuses on delivering inclusive, accessible and customer-centric solution while creating sustainable value for stakeholders. The Maybank Group consists of parent company and various subsidiaries, associates and joint venture. Its operations are structured into 3 main segments, which is Group Community Financial Services, Group Global Banking and the Group Insurance and Takaful, supporting its regional growth strategy. Okay, moving on to the next part. The applicable accounting standards used by the Maybank firstly is the MFRS 3 business combination. It is applied when Maybank acquires other companies and require the bank to use the acquisition method where assets and the liabilities are recorded at a fair value and any differences are recognized as goodwill. Secondly, MFRS 10 consolidated financial statement. It ensures that Maybank prepare group financial statement by consolidating all subsidiaries and control is established when the group has power over the investee and the ability to influence returns. Next, the MFRS 12 disclosure of the interest in other entities. Focus on transparency by required detailed disclosure of ownership, interest, and controlling interest, and the related risks in subsidiaries and structured entities. And also, MFRS 24 related party disclosure. Ensure all the transactions involving director, key management, and related companies are properly disclosed to avoid conflict of interest. And lastly, the MFRS 136 impairment of asset in ensuring the Maybank assets, including loans and goodwill, are not overstated by require regular impairment testing using the expected credit loss model.
Okay, next, I will update you on the details of group acquisition of subsidiaries and associates in 2025. Throughout the fiscal year 2025, the group did not make any material acquisitions that would result in a change of control. Focus on the list of deals on the right. In fiscal year 2025, we merely completed 3 representative capital operations. WOM Finance increased its stake on August 15, increased its shareholding ratio from 38% to 49%, with 218 million, effectively reducing its asset liability ratio and consolidating its financial advantage in Southeast Asia. Maybank made the capital injection on March 2, inject 145 million into it for internal capital enrichment and maintain 100% shareholding, aiming to enhance its local credit insurance capacity. Fintech sold its holding on October 7. The disposal of part of equity reduced the shareholding from 22% to 8% and recovered 42 million of capital, helping to streamline the asset structure and focus on the core business. How are these transactions presented in financial reports? We strictly follow the requirement of MFRS in accounting treatment. For MFRS 3 and 10, in view of 49% shareholding of WOM Finance does not reach the control standard, it is strictly calculated according to the equity method and will not be consolidated. Only our 100% owned subsidiaries are included in the consolidated financial statements to ensure accurate consolidated boundaries. For MFRS 12, the changes in equity of all subsidiaries and associated companies have been fully disclosed in the annual report through standardized forms with complete compliance. Finally, we conduct an objective self-assessment of the year disclosure quality. We have achieved refund transaction disclosure, clear accounting boundaries, strict distinction between subsidiary capital injection and joint venture investment, without any processing confusion for the steps that need to be improved. It is necessary to supplement the details of the fair value of identifiable net assets of WOM Finance after the increase in holdings, and to make a forecast of the auto financial assets in Indonesia. Okay, that's my part.
This slide shows group level goodwill data in thousand ringgit. Opening goodwill was 4,826,740. No new goodwill from acquisitions this year. After deducting overseas exchange difference, 124,310, and annual impairment 186,219. Closing goodwill stood at 4,516,114. The goodwill formula under MFRS 3 equals consideration plus fair value of previous interest less fair value of identifiable net assets. All goodwill came from historical purchases of King Age Securities and Indonesian Maybank. Under MFRS 136, total goodwill is allocated to 4 cash-generating units: Singapore Investment Bank, Indonesian Commercial Bank, Carbonia Retail Bank, and Equal Insurance in Malaysia. This slide focuses on impairment. Total impairment 186.29 million was fully charged to Carbonia Retail Banking CGU, caused by foreign competition, narrowing net interest margin, slow loan growth, and higher operating cost. Recoverable amount was measured via value in use DCF model compliant with MFRS 136. Key assumptions: post-tax WACC is 11.2%, 5-year forecast plus 2.8%, perpetual growth rate. Its current amount 948.65 million exists, the recoverable amount 755.36 million has impairment loss, and also the compliance stressors annual mandatory impairment test is conducted. Key assumptions are fully disclosed. Impairment cannot be revised as required. Also, the shortcomings are no sensitivity analysis for discount rate, no remedial plan disclosed for underperforming and Carbonia business. That's all. Thank you.
This slide shows the type of intercompany transaction within the Maybank Group. The main transaction include intercompany loans, interest income and expense, dividend transaction, management fees, and shared service charges. Among these transactions, intercompany loans were the largest transaction. These internal financing activities help support the operations of subsidiaries within the group. According to MFRS 10, intercompany balance and transaction are eliminated during the consolidation process. This ensures that the group financial statement presents a fair and accurate financial position. Next, I will discuss the notes disclosure and compliance analysis. Maybank followed the requirements of MFRS 24 and MFRS 10. Under MFRS 24, the group disclosed related party transaction, outstanding balance, and management compensation. Under FMRS 10, internal company transactions are eliminated during consolidation, and internal profits or losses are not recognized at the group level. Overall, Maybank demonstrate good disclosure practices. The main strengths are clear related party disclosure and proper consolidation adjustment. However, more details on transfer pricing policies and internal service transaction could further improve transparencies. Finally, I will conclude our analysis. For Module A, Maybank's acquisition activities comply with the relevant MFRS requirements. For Module B, goodwill measurement and impairment testing complied with MFRS 136. For Module C, intercompany transaction were adequately disclosed and properly consolidated. Overall, Maybank shows strong compliance with accounting standards and provide transparent and consistent financial reporting. However, more detailed fair value and sensitivities disclosure could further improve reporting quality.
Our group presentation is over. Thank you for listening.